Good morning, students. Yet again, a video on debenture redemption of debenture. And this part, we will be understanding about debenture redemption investment. What is debenture redemption investment? Let's understand. See, first of all, in plain language, an investment. Company is doing investment to get interest income, to secure that money, because in the secured investment they will be doing the investment, so that when they will redeem the debenture they will have some money to redeem the debentures. Which companies are required to make this DRI or debenture redemption investment? Not all. Only the listed companies, as given over here as per the provisions of Companies Act. Only all listed companies and unlisted companies other than NBFCs and HFCs. So in a nutshell, investment is required to be made by those companies which are not having financial in nature, means they are not financing companies. They are non-banking finance. They are not dealing with financing companies. They are unlisted manufacturing company, listed manufacturing company, or any infrastructural company, private companies, etc. But they are not related with, their business is not related with giving and taking loans or accepting deposits. Their business is not related with money. So those companies are required to create debenture redemption investment. That is all listed companies and unlisted companies, other than NBFCs and HFCs. They are required to invest in unencumbered, free investment. That means which can easily be turned into cash. They do not have any fixed time limit. They can turn into cash. At least 15% of the face value of the debentures to be redeemed during the year between 1st April to 30th April of the year in which the redemption is to be made. That means the date of making this DRI is between 1st April to 30th April as given in the provisions of Companies Act. How much they will have to make the debenture redemption? They have to make 15% of the face value of the debentures which they are redeeming in that particular year. As we have only the lump sum, that means whatever debentures, as we have only the lump sum in redemption of debenture redemption in lump sum. So whatever debentures a company is redeeming, that debentures 15% value has to be there as debenture redemption investment. Not for all the companies again, only for listed and unlisted companies not related with finance, not a financial company. Remember that. Now, how much? 15% of the amount of debentures maturing during the year. That needs to be paid during the year. This investment, for example, deposits within, now where the investments are made in the scheduled bank or under debenture redemption investment. The amount so invested is then recovered at the time of redemption of debentures and utilized for payment to the debenture holders. Now, at the time of redemption, the company sells this debenture redemption investments, gets the money and use that money to redeem the debentures. Debenture redemption investment may carry interest, as these interests are receivable to the company. And remember, bank will give the interest by deducting the TDS. Wherever the company will make the investments, like in secured banks, in scheduled banks, so bank will return the interest and the investment value by deducting the TDS, tax deducted at source. So we have to know interest part, we have to know TDS part, we have to know how to create DRI, and which companies, that I already told you how to create a DRI, how to create an investment. Yes, class 11's journal entry. To create an investment, investment to cash, and to sell the investment, cash to investment. To create interest, we will have another video on interest. We will be discussing about that. So, as I told you already, between 1st April to 30th April, any one date of our choice we can take. I have taken 1st April. You can take 30th April also. You can take 15th April also. Any date. I have taken 1st April. Debenture redemption investment to bank. DRI is purchased. And on the date of redemption, bank to debenture redemption investment. If you sell off the redemption investment, to sale of the investment, to pay the money to the debenture holders. Paying the money to the debenture holder is same as we have done in the first video. That is debenture holders to debentures, and then again debentures to debenture holders, and then we will pay the money to the debenture holders to bank. That we know. Which company requires to make DRI? See, all these companies do not require. Now, all listed companies, they require to make DRI, and unlisted companies have to make DRI. And listed companies do not have to make DRR also, but they have to make DRI. Debenture redemption investment, they have to be there. Create. One sum on 1st April 2016, Asset Limited, now it's a listed company, listed construction company, issued 1008% debentures of 100 each to be redeemed at par on 31st March 2020. Past necessary journal entries regarding redemption of debentures and DRI. So, debenture redemption investment. As per the provisions of the Act, it's a listed company, a construction company, that will non-financing company. So they have to create DRI only before they will redeem the debentures. And the redemption investment date will be 1st April to 30th April, as it is given. As it's a listed company, only DRI and not DRR is required. Amount of DRI will be how much? 15% of the face value of the debentures to be redeemed. Debentures needed to be redeemed is 1 lakh. See over here, 1000 into 100 is 1 lakh rupees debenture. Then the face value of the debenture. 15% of 1 lakh is 15,000 DRI is required to be created. On 1/4/19, they are creating the investment. 1/4 I have taken. Why? Because I prefer 1st April. The date of redemption is March 2020. But your date is what? 1st April to 30th April. So prior to redemption, we have to create it. Prior to redemption date, we have to create a debenture redemption investment, so that on the redemption date, you should have an investment. So it is 15% of the face value of the debentures to be redeemed on 31st March 2020. 15% of 1 lakh is 15,000. That is 15,000 to be DRI. Now this is a journal entry. Debenture redemption investment to bank, DRI is created. Then on the date of redemption, bank to debenture, you are selling of the debenture redemption investment in order to get the money back, 15,000, that is 15% of 1 lakh. And then you are just passing the entry of redemption, debenture to debenture holders, 1 lakh, 1 lakh, and then debenture holders to bank, that also 1 lakh, 1 lakh. These 4 entries are only required, students. So you notice, students, in this listed company, only 4 entries are required. For these companies, is all India financial institutions regulated by RBI, banking companies, LIC, IDFC financial institutions, that is unlisted NBFCs and HFCs, they require only 2 entries for redemption. One is what? One is debenture to debenture holder, and then debenture holder to bank. For all listed companies excepting financing companies, they require to pass 4 entries. The first 2, that is debenture to debenture holders to bank. These 2 though are core entries required for each and every type of company. For all listed companies, DRI has also to be created. So they have to create DRI to bank. One more entry, and one more entry is what? That is, they will sell the DRI, that is nothing but bank to DRI. So see, 4 entries for all listed companies. And for unlisted companies, you have to create 6 entries. That we will see in the next video. So this sum we have done, students. Hope you have understand. Now you will be doing this sum as a homework. 4,000 debentures are there. The redemption date is same. You have to create DRI. So please do the homework and send it to me through my WhatsApp number or through my Gmail, or you can write in the comment section of Sanjiv.Sirjii's channel. Thank you, students. Thank you very much.